Hi, welcome to this video series where I answer questions from the readers of Monevator.com. Monevator is the leading UK finance blog for personal finance related issues. The question in this video comes from Ray, who asked, I'm in the de-accumulation phase, presumably of his investing life, and want to some kind of return on my investment. Lars, you seem to not support any kind of market segmentation. It's the full-on total market or nothing. But this year, the ACWI, the All Country World Index, is only paying a 1.7% dividend, whereas my dividend-focused ETFs seem to be doing better than that. So is my strategy wrong? Here we're in the world of equities. I explained in other work why, for most people, you shouldn't have just equities in your portfolio. It's typically far too risky, but you can look elsewhere for that. It's also worth noting that I argue, as part of this idea that you can't outperform the market, that you should buy equities in proportion to their market value and diversify across the total world as much as you possibly can, as cheaply as you can. And the reason we do that is because we don't think we can reallocate value between equities in a superior way to the market, which is consistent to accepting we can't beat the market. Now, this question of dividends. I think the first question to ask is there any reason to think that dividend-paying stocks overall will outperform non-dividend-paying stocks? Now, the answer to that is no, unless you think you can beat the markets. Now, keep in mind that the dividend-paying stocks, you get capital appreciation. Well, hopefully you get the change in the share price plus the dividend, whereas non-dividend paying stocks, you just get the change in the share price. Now, but as I think what Ray is alluding to, practically speaking, I see an argument for automatically receiving dividends into your bank account. As you need the cash for perhaps your living expenses. When you don't receive dividends, so if you have non-dividend paying stock, to realize the capital, you have to sell securities, which can be a headache for some people. But I think the overriding issue here is one of tax. If let's suppose we have two groups of stock. One is paying a 5% annual dividend, and the other doesn't pay a dividend. And let's say that the first group is flat for the year, but you received your 5% dividend, so your $100 became 100 plus 5 in dividend. And the second group, you don't receive any dividend, but those shares went up by $5, so they're now worth $105. Now, in fact, this could be a very similar group of stocks. Like could be index trackers with different payout policies, which may be what Ray is alluding to. But in the second case, to achieve the cash that you would have gotten from your dividends in the first case, you can sell 5% of your portfolio, and you should, ignoring tax, be equally well off. Now, for most people, the ignoring the admin issue, in one case you'd be paying dividend tax, in the other case you'd be paying capital gains tax. And I think that should drive your decision. So it's not that we think that we can predict which group of stock will do better, one than the other, but it's more that your individual tax situation should drive it. Now, as an extension of this, some index trackers pay out the dividends that they receive from the underlying companies, and some reinvest it. Which index tracker you should own should really depend on your current and expected future tax situation. So that should be the driver, not the dividend policies of the underlying businesses selecting those. So I hope that answers the question. My name is Lars Kroijer. I'm a former hedge fund manager who has written a couple of books about finance, and I've done these videos and some blogs as a hobby in connection with that. The premise of my work revolves around the fact that I think it's very hard for the vast majority of investors to outperform the markets. I try to explain what this means and why I think it'd be a hugely positive thing for investors to come to understand and embrace that fact. Again, there's more about this in my books and other videos if you're interested. But thanks a lot for watching. There are other videos in this Q&A format if you're interested, but in any case, I hope you found this one useful.